Welcome one, welcome all to Money Talks. We just bumped right over from our DeFi high entry level DeFi course that we're doing daily, and we're just going to cruise right on over here and talk to Taylor and Jeff, do a little bit of wealth management and a little bit of talk about the macro markets. How's it going, gentlemen?
Good. It's going good.
So what's going on in the markets today?
Well, honestly, I haven't even looked. Let me look.
Well, I'll tell you, silver's freaking about to break $117 an ounce.
It's up about 0.5%. Looks like Apple and Meta are going to. They're releasing earnings either tonight or tomorrow, I think. So it's positively anticipating things.
Well,
this is down about 1%.
Yeah, this is not good for silver though, to go parabolic like this.
Every time I think it's going to pull back, though, it just keeps going.
Yeah, but when it goes too crazy, too quick, then when it pulls back and a ton of people jumped in, then they all sell out, and then it causes a massive drop.
Right, you get an air
pocket. No, absolutely. It's just, when is that going to happen? I mean, I was thinking it was going to happen, back when it was like $80, $90. And then I was thinking, okay, that psychological level of $100, and it just keeps blasting past, all of these. But, you're right. Historically, looking at charts, whenever something like, is doing what gold and silver is doing right now, and it's just pumping out of control like this, when the pullback does come, and historically it will come, it's going to be epic. I mean, it's going to be a massive short opportunity if it does indeed pull back.
Yeah, I mean, it just like it, things need to naturally grow, within a reasonable thing to show that it's healthy. This is not a healthy move just to shoot up 15% today. And this is silver. It's a commodity.
Some people would say it's because of, just market manipulation for so long that the price has been suppressed. I mean, what's your guys' thoughts on that?
Yeah. I don't have an intelligent answer to that. I think it's beyond my normal sphere of operating. I think it's possible. I don't, what would be interesting, and you could do this much easier with crypto, I think, than you can with silver, but I'm sure there's a way. It would be really interesting to see where these order flows are coming from. Who's the marginal buyer? If it's institutional, I think it's more believable than if it's retail, right? But I don't know. I don't know where to go find all that information. But I do agree 15% in a day is not a, matter of fact, something I'm looking into this year, just because AI can help me do it. As I've often wondered, if you just scanned on a daily basis and you had some kind of pre-selected universe, let's say mid-cap stocks, right? Something like that. And you said, hey, anytime a stock moves up or down over 10%, do you buy really short-term options in the other direction, assuming that you're going to get that rubber band's going to snap back? Mm-hmm. And I'm curious as to what that reversion, the mean trade over time, like what's the right extreme to set that buy line at that you capture most of the snapbacks and avoid most of the breakouts, right? It could be a very interesting portfolio, but that's only in my head. I haven't actually done the research on it yet.
So Taylor, I know you're a bit of a degen in both TradFi markets and crypto. So what's your thoughts on a silver short or a gold short right now?
The problem is you go either way. Okay, so you can do, what is that called, a straddle? Is it?
Yeah, or a strangle. There's different ones, but you can basically buy options that either pay off if it crosses either price in a direction, or pay off until it crosses either price, or a combination thereof. So you can do a lot of things if you really wanted to play silver, but you're still guessing.
Oh my gosh, my count just it's not. So it went way up today, but I'm just like, this is just turning into absurdity right now. Like, it's not,
But think about how long the meme stocks, right? AMC and what's the GameStop. Think of how long those went stupid nuts. because it caught the attention of the retail trade, the Robinhood trade. And so I do think, in all things like this, once something's decoupled from underlying, even if silver is long-term underpriced, right? I think to Taylor's point, it's a much more believable path when it's kind of slow and steady to some degree. So when you get decoupled from that, and you start having these massive gap up or gaps down, you have to remember, Keynes said, and he's so maligned by both the left and the right because neither one of them does his stuff properly. He actually said you should stimulate when the markets are, when the economies are poor, and you should pull back when economies are good. And neither side does that. But anyway, I digress. Point being, he said the markets can remain irrational longer than you can remain solvent. So whatever bet you make, once you see these kinds of extreme events, you better recognize you're speculating, not investing. And it better be money you can afford to lose. Right. So then the question is, what's going to piss me off more? Not buying gold at whatever it is, 110 or 115 or whatever it's going on at, and it goes to 130, or buying it at 110 and it goes to 80. Like, which one's going to piss you off more? Right. So that's the rule I would use.
It does need to get up to its, situation. But the problem that you have, if you have everybody flooding in and buying because of it's just like the
FOMO. They're FOMOing into gold and silver.
Yeah. And then when that backtracks, and then it causes panic selling. And so then you have these huge swings, and it just, the problem is the people who really get hurt, are the people who jump in on these FOMO things. It's often when we're meeting with people, me and Jeff, it's shocking how many people feel like the market's never coming down again. And it's the thing
and what was it, Warren Buffett that talks about, sell when they're greedy, buy when they're scared. Yeah. That's kind of what we're seeing right now is, just everyone, when it comes to metals and stocks, everyone is in this like fever where it's just nothing but up. And so that, they're buying. And I would tend to think, and Jeff and Taylor, you can probably speak more intelligently on this. I mean, what do you see smart money doing right now? I would think that they're not buying, that they're selling and kind of, or at least hedging, hedging to make sure that they don't lose their shirt if everything takes a massive downturn like Taylor's talking about.
Yeah. I mean, when silver went bullish months, or earlier this year, that's where it was to buy. It's, if you're going to be a trend buyer, you got to know those situations. This is smart money, is you don't gamble. You wait. Like, if you got your silver, okay, just hold on to it and, sell a little bit of it. You make a little profit here. Don't just hodl everything. Just keep holding on to it. But it's not now that you jump in. It's like, you just understand that there are big moves. There are always opportunities to make money. Don't worry about it. Wait until you see the trend break out on something. And then that's when you get in and you follow the trend. So right now, the trend was silver and gold. In our newsletter, it's still bullish. All right. We've had it out there for a long time now.
Oh, yeah.
And so, I mean, it blew through the top of our range. I mean, I just never seen silver ever do this as a situation. It's just like crazy because it was in the 90s last week.
So what Taylor's talking about is our DeFi Wise newsletter. So this is something that me and Taylor put together every morning. We get up at 4 or 5 in the morning to put this together, and it's basically just trading ranges. Kind of what's going on in the markets. It's just a summary. Those of you that are too busy to pour over the internet all morning, it's basically all the highlights. What's going on with gold and silver, what's going on with crypto, what's going on in traditional markets. And, kind of the, short narrative, and then some like newspaper clips of, kind of some of the highlights. So when you're having your morning coffee, it's, 5-10 minute read, and you have at least your finger on the pulse of what's going on in the markets, and you're not kind of going into your day blind. But it's just shy of $20 a month. We send it out Monday through Friday. It delivered to your email, and then also you can look at it, here on the website as well. But just want to do a little bit of shameless shilling real quick.
Yeah, because like right now the Qs are bearish. I mean, so it depends on earnings reports that keep coming out. But right now, like, commodities are going up, Qs are bearish, and so they, for a long time now, it hasn't remained bearish for a long time, but that's somewhere to look when that flips and goes back to being bullish. I guess I could start including the Qs and the SPY into our thing, just so people have that information of like, okay, where is things going? But most of everything is pretty much, it's just crazy. The market is, they call this like the blow off top. Usually when you see the correction coming, is there will be a massive up push really quick, and then it just falls.
I'm wondering which one of these massive upticks is going to be the one, because it just doesn't freaking stop.
Yeah, it's nuts
until it does.
Mm-hmm.
It's the division between the haves and the have-nots. Those who have are getting filthy rich. Those who have nothing are getting really poor.
Yeah.
And
it's kind of why I tend to keep a longer mindset in my investing, and only use, money, like Taylor said, that I am potentially okay with losing, because anytime you're investing, it's basically legalized gambling for the most part. So, like my silver, I've been stacking silver since it was $5 an ounce, back when I was a kid. And, now it's, I'm well into profit. I'm not going to be selling any of it, because it's, again, it's a long-term investment for me. It's my rainy day fund. If I ever find myself in a position where I need a big chunk of money to, for an unexpected, life event or something like that, I got that cushion. So
you keep holding on to that. I'll be using some of that in the future when you're dead.
Taylor says that because he's the executor of my will. He's like, Mike, you just keep stacking, Mike. You just keep stacking.
It'd be great. It was like one day,
Yeah, absolutely. And
you're like, he was a multimillionaire and lived like a peasant.
It's that's what I'm going for, because it doesn't matter how much money I make. I'm not changing my lifestyle any.
Yeah. So I just did a little bit of math here. So get this. So if you invested, because what is it? DeFi Don mentioned silver adjusted for inflation is way devalued. So I piqued my interest. So I went back, and if you take the 80s high and you just adjust for inflation, it should be around $200 an ounce.
Mm-hmm.
You take the 80s low, which was like $3 for an ounce, and it should be about $17. So that's not too helpful, is it? 17. So somewhere between $17 and $200 adjusted for inflation, depending upon if we're adjusting off the absolute low or the absolute high.
Mm.
It really, it's the thing, the reality of, the problem is that there isn't enough silver for the technology that's coming out. That's what's driving a lot of this, is a speculation of the future. Mm-hmm. But also, that's predicated upon some new technology coming out, and silver's not really needed, but we don't really have any kind of bearing on any of that. So,
which you just encapsulated my entire fear thesis on NVIDIA, right? Absolutely the backbone of AI until it's not.
Yeah. That's what shocks me about people just investing all their money in NVIDIA, is like, it is one technology and, one invention away from being worth nothing. And so it's like, you diversify out of things, don't just hold something thinking it goes up forever, because if you look at all these companies, none of these companies, 20 years ago were even really anything, right? You got NVIDIA.
Well, NVIDIA it was just mostly memory, but not, it's only been around, I don't know, some 30 something years. Same thing with Google, or now Microsoft obviously has been around a while, but yeah, a lot of these companies.
DeFi Don brings up a very valid point. One of the major contributors to NVIDIA pumping like it has, for the past years, has been the use of GPUs, or graphics cards, in mining Bitcoin. It's a lot of what they do is that, and then of course you got AI and other things, but that was a huge catalyst to NVIDIA going parabolic initially. Was people couldn't get a hold of regular processors, and so they started using graphics cards, because graphics cards, for gaming, actually have a processor on it, and so it was basically a workaround to being able to get what they needed to continue to mine Bitcoin. So it's like Jeff and Taylor's talking about. All it's going to take is a change in technology, more powerful chips, or something, to where it's just that bubble could potentially burst.
And AI is, it's amazing. It's an awesome opportunity, but these AI companies aren't making money right now. Like Microsoft is bearish right now, and they report later today? Is that when they report?
I think so. Later today or tomorrow. I'll look it up.
But their problem is like Copilot, no one wants, and so they can't make any money off of it. And that's mainly because
It's Wednesday.
Wednesday. Okay. And so one of the problems with AI right now is like, it's not profitable, just charging their fees that they are to doing it. It takes a lot of money to run these, to build out all the data centers and do everything. And so investors are going to put their money into it for so long before it's like, well, you guys got to make money. It's
like an interesting thing with Microsoft as an example. And again, these are not, we got to get a disclosure at the beginning of this. This is not personal advice. It's just an observation. I don't know your situation. Call your person. But I do have a client who's very heavily invested in Microsoft and hasn't diversified amongst, even though I've really exhorted her to. And of course, looking back to last year and a half, she's like, see, look, even though it's down, I think $80 from the high, even 6 months ago or something. But I'll tell you what I think is interesting is when Microsoft reports, they have to talk about what happened to they have to write down or report on their share in OpenAI. And I want to say last quarter, they had a $13 billion loss in OpenAI because it's just burning money. And they own, I think, 29% of the company overall. And honestly, I haven't used Claude. I've used Gemini. I've used Grok a little bit. I kind of got in the chat ecosystem. I pay for the pro. I like it. I mean, it has things about it that drive me nuts when it keeps telling me it didn't do anything or it's finished and it's not. But I'm sure that's with all of them. But I do think, OpenAI it reminds me of that scene in Raiders of the Lost Ark. In the very beginning, where he moves the monkey statue or whatever and replaces it with a bag of sand, and he's like, yeah, and then all of a sudden it just starts sinking, and then the boulder comes and he's sprinting out of the cave. And does he make the entrance to the cave, or does a boulder catch him? And I really think that's OpenAI right now. I feel like will they break through to some kind of monetization path that's significant before the boulder of debt just runs them over? And expenses and cash going out the door. I will say, though, that something I think doesn't bode well. Supposedly, I think December, there was a memo, and now they're going to start putting ads on chat on the free tier, even though who's the guy that runs chat? What's his name?
Sam Altman.
Altman had said, a year and a half ago that internet ads are the death knell of any software as a service if you got to go to ads. So,
well, I mean, that's kind of what happened with Yahoo. That's what happened with not Facebook, but what was that other one? That MySpace is, MySpace, they started putting ads all over the place. and it basically killed MySpace and allowed Facebook to take over because they didn't have all the spam. Yahoo, same thing, just nothing but spam and ads. And Google came along, and it was just that same that you see now, that nice, clean, UI that's just says Google and has the little, search bar, and that's it. But yeah, I would, that annoys people, so potentially. So DeFi Don says this, and this is something I've seen, and I definitely would like to get your guys' input on it. So, people are talking about this, Magnificent Seven, the, Tesla, Microsoft, all of these, NVIDIA, and this circular financing, where it's just kind of like they keep buying each other's stock. And, like, is that something that you guys, have seen anything about, or?
Oh yeah, it's a very concerning accounting trick. Again, it's one of those things where it doesn't matter as long as they reach organic profitability fast enough. But literally, and it's like 7 or 8 companies. You can Google this and see these charts they're all over Twitter, for example, or X. But it's like NVIDIA, OpenAI promises 300 billion to NVIDIA. NVIDIA commits the chips. NVIDIA then turns around and sells the time on the chips to CoreWeave. CoreWeave gives the money to NVIDIA, or not to NVIDIA, to OpenAI that gives the money to NVIDIA, but NVIDIA turns around and gives it back to CoreWeave for leasing agreements on their other. It just becomes this, if we all, how about this? I give Taylor $100. Taylor gives you $100. You give me $100. In the real world, all of us know we're not richer. In the business world, each of us get to record $100 worth of income.
Yeah.
And that's a problem.
Yeah, because it's the same companies that are controlling everything, and they're not building like anything that's, they're building the digital infrastructure that we have, but there's not like actual infrastructure that you need to survive and different things like that. So it's like, okay, well, we can all live without our digital stuff. We can't live without all the other stuff that we need. But yeah, they're all, it's kind of this weird problem of, with digital world, you can just have a few companies that control everything.
And also, we don't know, and I'm completely speculating here, and I'm sure I will later today, but I'm not actually throwing Trump under the bus on this, although it's not a conservative position. But he did take a 10% stake. He just declared it and made it happen. So it used to be the Fed put, right? We used to be talking about, well, the Federal Reserve's allowed to constantly manipulate rates, financial repression. They're going to print money, and that's what's going to allow these markets to continue to go and go and go. And I think that's still a thing, or could be a thing. It is with yield curve control and reverse repo and all this sort of stuff. But now we have a president who at least once or twice now, I guess, has invested in a public company directly with Treasury assets. And so I wonder if the circular financing or other things started to blow up, if we really saw, especially under Trump's watch, a massive meltdown, I would not put it past him to basically try to half nationalize these companies under the auspices of, it's going to go back and pay the American people. But really it would be to put a safety net and a dollar amount underneath the value of these companies, because it's tied to everybody's 401ks. It's tied to everybody's brokerage accounts. It's just, it's just interesting that we may have 15 years after 08, or almost 20 years after 08, gone right back into, too big to fail, but it's now the technological version.
Yeah. It is our interesting problem that we have, is this constant propping up of the market as if the market is really what affects everybody's lives. It just affects the wealthy's lives. And so it's
right. But if the wealthy get affected enough, they start laying off the regular Joes.
Yeah, that's the natural process of how we rebuild a country, and you have different industry. What the problem is if you keep propping up the wealthy, well, they control the whole system. You don't have this turnover that you need to have in a society where it's like, your idea sucks. It doesn't work. Because eventually other countries who don't know, that's the whole argument of capitalism, is you want capital in the hands of your most capable people. Well, we're not doing that anymore. We're putting it in the hands of our largest companies and thinking
Well,
they are the
I
most
think,
capable.
well, and I think that's the difference between capitalism and crony capitalism. Currently, like Taylor's talking about, is those that are wealthy, kind of own the politicians, they kind of own the system, and so they're able to just keep gaining wealth. Whereas what Taylor's talking about is how it's supposed to work, where if somebody comes along with a better idea, like these banks, if they mismanage the bank and it goes under, then they should just go under. That no one should be too big to fail. Somebody that is going to do a better job of managing their bank or managing their business, or producing a product that is profitable, and that gives value to people. That's what you want to see. That's what drives innovation. That's what drives a healthy, growing economy. Not what we're seeing now. What we're seeing now is the decline of an economy. We're watching the dollar devalue. We're watching inflation go through the roof. We're watching a government that's printing to try to maintain this kind of diseased economy that we have. And it's very troubling, that we're seeing, stocks continue to rise. I think part of the reason why we keep seeing gold and silver pump, in my humble opinion, I'm far from an expert, but I think that people are scared. They're looking for a place to put their value, to put their liquidity that is going to hold up, better than the dollar, better than fiat, and potentially better than, some assets out there. Because historically, gold has been an excellent store of value. It holds its value over time much better than many other assets. I mean, would you guys agree with that, or would you think that maybe I'm kind of up in the night a little bit?
No, I think you're right. I do think people need to understand that gold can be decoupled from it. I mean, over the long run, it absolutely is a store of value. In the short run, by the way, can be a decade or two. It can certainly lag significantly. It did really all through the 2000s and early and half of last, till about halfway through last decade. So it's something. Again, I think one of the biggest challenges are that us humans, our time horizon, like what we think of as a reasonable period of time, is not necessarily correlated to what a reasonable period of time is for an asset class. So, like, there's a study by the Dalbar group that always releases every single year, and it shows 20-year rolling returns, and it's like market average actively managed hedge fund, which is just the market minus fees on average. And then it's like average investor. And the difference is like the market does like 9%. The average fund does like 7.7. And the average investor does like 3. And it's just because 20 years is a really damn long time as a human. And you look back and those returns were just based on, the market returns was just based on a buy and hold experience, right? But you ask the average investor that's in the group, they only tweak a position or two, like once a quarter, once every 6 months. So from a human's perspective, that seems completely, I think, like reasonable. Oh man, this is happening in the marketplace. This is happening in the economy. Like, for example, if gas went through the roof tomorrow, like doubled, I might be like, oh man, I think automotives, you're probably gonna be, maybe you don't want to hold auto groups because people are not gonna they're gonna start carpooling and won't have as much demand for cars, whatever, right? So it's really hard. And I'd use a trend following strategy. I use something completely different than what I'm talking about. But just in general, it's very difficult to have these truths and then incorporate them into your personal financial life, because our time frames are so much shorter as people when we want and need our assets to be profitable and to be liquid and to be available for the life we want to lead. So it's quite frankly where financial planning comes in, right? It's making sure you have your buckets, different buckets for different goals with different structures, so that you don't necessarily have to bail on a good strategy at a bad time.
Yeah, no, I mean, and that goes back to what I was talking about, with my position in silver, is just, I've just, bought it over the years at, a much lower valuation, with the understanding that, once I buy it, I just pretend like it doesn't exist. And it just, sits collecting dust in case I ever need it. But if I was buying it and I was emotional about it, and say that we have this epic pullback and I was buying it at $100 or $110, I might get emotional and I might panic sell it like, 90 or 80 or something like that. And I just locked in losses. The best strategy that I've found personally, and again, I'm not an expert, but I invest in things that I believe in long term. Things like Bitcoin, things like gold, things like silver, things like real estate. And I just hold them. I sit on my hands and I do nothing. The only thing that I do that's somewhat short term is, some DeFi, like, lending and things like that. Because to me, it's just a high interest savings account, really. Are there risks? Absolutely. But, kind of overall, kind of net, I am always up. I'm always, increasing the amount of assets I have on these, on these assets that I believe in long term. Aerodrome, Canton, even Plume. I still see potential for that, even though we're way down on that. I'm not in any DeFi positions right now because the liquidity sucks. There just isn't, a whole lot of TVL in its DeFi right now. That's taken a pullback, and I think a lot of that has to do with marketing. I think that the team kind of went the wrong route, but I won't get into that. But I mean, what is some of each of your longer term strategies that you're still holding true to right now, just to kind of both continue to profit and to hedge against a potential downturn in the stock market and metals and, other things?
Taylor?
Oh, well, right now I'm mostly in like my investment accounts, mostly treasuries.
Okay.
But in real honesty, I'm put most of my money in myself right now, like growing my own businesses. I think that's, if you're a young investor,
buying purses and shoes, just spending it on yourself.
Yeah, pedicures. But no, when I have business ideas, I put my money into, growing my business mostly because I see that's where the most value for my dollar is going to be, is how can I, invest in myself more than anything? Because I still that's where you get your greatest return, will be in yourself. If you're willing to do that, if you're wanting just passive income, it's hard right now to tell people what to invest in because nothing is based on historical trends. They make up new valuations all the time to value these companies. And it's like, okay, we can keep playing that game, but remember, the stock market ultimately is not coupled to these companies in any way, their values. Like NVIDIA is not worth $4 trillion.
No.
It's purely, speculation. So it's like, well, you can put your money wherever you want to put it. Right now, I hold most of my money in treasuries, but mainly because it's just too crazy for me. Unless I like silver, of course, I bought earlier because I saw it going up, and then there's other things that I'll put my money in, but not most of the stuff is just way out there.
I think for me, for my clients, our clients, that's where alternative investment comes in. That's where operational businesses come in. I've got some institutional real estate plays that I like, although I have to be very careful there because I think real estate in general is overvalued. But I do think that there are pockets. I like oil and gas if it's properly hedged. I like structured products because those are actually hedged instruments that use puts and calls that investment banks put together. So there's things that, there's things that can be done. I mean, honestly, so my biggest concern that if I'm being completely honest, I do not believe would be as big a deal in an acute sense right now had Harris won or something. But in general, because it's the uni party and neither one of them, if you just look at the debt when someone gets in and the debt when someone gets out, right? every single party, it doesn't matter what party, it just goes up, right? And since Clinton, the deficit's done the same thing. So there's the national debt, which is one thing, and then there's the deficit, which is just how much more over our budget do we spend every year. So we did have a balance there for like a year, and then that blew out with 9/11 and all the other stuff that happened. So in the last 26 years, we've had deficits that increase every single administration, and for the last God knows how long, I don't know, since World War II or before, we've had debt that increases. Long term, I'm extremely worried about our dollar being the reserve currency of the world at a pace or at a rate that can sustain our lifestyle, because people don't understand. I saw Pete Higgs when 2 weeks ago when the Greenland things was at the absolute height of, oh no, are we going to invade, whatever, right? He made some comment about like, we have the largest army, we have the best army in the world, who's going to stop us? And what he doesn't understand is we could be ground to a halt, not with guns, but just, all that would have to happen is is Europe and China get together and go, yeah, we're going to teach them a lesson. We're going to humble these guys and we're going to hurt ourselves. We're going to dump all our treasuries, or a lot of our treasuries, all at once, which would instantaneously cause double-digit inflation in our country. Because if you could go buy, so if you're Mike, if you're Norway, or you're the EU, or you're China, or whatever, and you sell a 10-year treasury, it's got 6 years left, and you sell it for a song, and I can buy it from you at such a discount that I'm getting the equivalent of a 10% return, why would I ever buy a U.S. Treasury directly from the United States government unless they were offering me at least 11%, right? Or 12 or 13 for a brand new term. So we are really, really at the mercy. We're at the mercy of our creditors. And so the only thing what I'm trying to say is both parties are the same when it comes to no fiscal responsibility. They have different priorities, but they end up doing the same thing, right? They end up spending 100%. The only difference is I think Trump has exacerbated it a little bit. He's crunched it. He's made it faster because his rhetoric is so not incisive. What's the word? Incendiary. He can cause. So now he's got people emotionally panicking plus financially panicking, and it's very, very concerning. And again, if Harris ran, I think she would be saying nicer shit to our other people, but it wouldn't change the underlying math. And I don't know how to hedge as a person that lives in America. For my clients that have American dollars, it's very difficult to hedge against that. But I just want to say this for the group, because I've been thinking about this. Imagine if you had an unlimited American Express gold card, like you were the combination of Michael Jordan and Taylor Swift popular, and they just said, here's your gold card, you can use it. And every single day you went out and talked about how stupid and moronic and dumb and idiotic and evil American Express was. Eventually they'll cut your gold card limit. And that's what we're doing to the rest of the world with some of this rhetoric and some of these actions we're taking. And we forget that we are a debtor nation and we need their money to live our lifestyle. Like, their money is how our roads get built. Their money is how Medicaid bills get paid. Their money is how, because they think they can trust that we're going to pay it back. And we have the biggest economy and the biggest military, and it's always been a safe bet. But now that it's spiraling so much, and now that Doge has failed so spectacularly to not in what it identified, but in what people end up getting codified, that we are at risk. I think that is by far a greater risk to our country's future than left or right, than global warming, than AI. I think that's the biggest risk.
No, absolutely. That's the foundation of it all. If we don't have a solid, economy, or if we have a solid economy, I'll go this route with it, then we can weather a lot. But if we have a failing economy to where, other nations, don't want to buy our debt and fuel our economy, like Jeff is talking about, and, we have the political unrest, that we're seeing going on in the streets and stuff like that. And, people's lives keep getting harder and harder. And, just to, keep the lights on and, keep a roof over their head and food on their table, it just, it's a snowball effect, and it just gets worse and worse and worse. And it's why I know, why I've, for the past 10 years plus have been so big into, coming out here and building my cabin and, homesteading and, storing food and, things like that, because I want the peace of mind of knowing that, the people that are mismanaging all this, I want the peace of mind that if, and I hope it doesn't, if it goes to shit, that I can take care of the people I care about, that they can show up and I'm going to have food and I'm going to have shelter and I'm going to have the things that they need. Cause I honestly have lost total faith that our government, it can effectively manage things. I mean, I think on every aspect. In war, they've failed. Foreign affairs, they've failed. Our economy, they've failed. Being able to, at the state level, at the federal level, all of it, they failed. Our borders, they failed. It's every single thing that they are in charge of, they are failing at.
I agree. And I think I know DeFi Don points out, he goes, our economy dwarfs other economies, and it does. Like that is still the sheer size of our economy being so far ahead is number one versus number two, which is China, and the fact that China's communist. Like if China were, for argument's sake, the EU, it'd be a lot worse. Believe it or not. I mean, maybe it wouldn't be geopolitically, but it'd be a lot worse economically because nobody trusts that China's. I mean, they're communists. You put your money there tomorrow, they could just seize it, right? So, 2011, the market went down like 1,100 points, and I think the market was literally worth a third what it is today. So it went down like 1,100 points in a day because they just revalued their currency overnight without telling anybody. So there. Don't get me wrong. I'm not saying that we're like tomorrow where it's going to be Great Depression Part 2.
No. But we're definitely moving more in that direction than in a prosperous direction.
The trajectory is the wrong direction, and it seems to be a very stubborn trajectory. Trump is famous saying we should have the best credit in the world, right? We should have because we're the United States. Okay, well, if tomorrow you came out and codified, like who's the richest guy? Warren Buffett said once, he's like, you want to balance the debt, just make it to where you can't get elected if they add more to the cost of the budget than like make it a constitutional amendment. Like you cannot add more than 3% or whatever last year's COLA was to the budget. And if you do, or if it goes over that, like everybody immediately
get reelected,
right? And we do something like that, which of course we won't because they would have to vote it in. Or if we were to say, if he'd come out and again, and they may not come across it on this channel sometimes because of some of my frustrations, but I'm pretty pro-military. I mean, I think we need, at least in the world we're in, we need a military that is decisively better than everybody else on the planet because we just can't trust that the good guys are going to do the right things, right? And I realize sometimes we are definitely not the good guys, but in general, I want to believe we're the good guys and I want to believe we're going to protect freedom and all that good stuff. However, you come out and say, I want to raise the military budget of 1.5 trillion. That's not going to lower rates. Now, if you said, I'm going to cut it by 200 billion, that's the kind of thing people might be go, oh my gosh, they're actually serious, man. Maybe they're getting less risky and maybe that's something, a place I can go put some capital. So,
well, I can pretty much guarantee that almost any government run organization, a department, that there is plenty of fat that can be trimmed. I mean, when they have this mindset where they always have to increase spending, that they always need more, and instead of using what they get more effectively. And a perfect example is the Marine Corps. I was in the Army and the Marines, and in the Army, they're all about, making sure that they get more the next fiscal year. They make sure that they spend what they got because the government incentivizes them to do so. Because if you don't spend it, they cut your budget. If you do spend it and ask for more, they increase your budget. The Marine Corps, on the other hand, they, for whatever reason, because of their pride or, whatever, most of what they have is hand-me-downs, like that they bought, that the Army said that they weren't going to use anymore, like the Cobra helicopter. The Marine Corps still uses it. It was something that the Army got rid of way back in the day when they got the Apache. The Marine Corps is the redheaded stepchildren of the Navy. After the Navy buys its ships and all their expensive stuff, then the Marine Corps gets what's left. And they've learned to operate on that, and very effectively. I mean, look at history and look what the Marines accomplish with, their, small budget. So it doesn't take a lot of money, relatively speaking, for the military to do its job. There's just a lot of government contractors, and there's a lot of, people with a vested interest in politicians that throw money at them, like Boeing and, all of these, to ensure that they stay profitable, that they keep growing. And that's what, kind of fuels this too big to fail, or these mega corporations that doesn't allow that, younger, more effective and more efficient business to come up. Mm-hmm. Like Taylor was talking about earlier in the show.
Jeff, what is the government's, like, part of our economy? How much of it is the federal government?
Oh, it's massive. I mean, well, if you just whatever we spend, so $7 trillion a year, because you got to think about it. What, this is the biggest argument for on the left is like, well, every dollar we get in, we spend, so it's all stimulus, right? Because it's not like they're saving any of it. It's all going out as expenses through all the departments, to the contractors, to the lobby. It's all going out. So it's about $7 trillion a year. So I don't know what the multiple on that is, but I can ask. Let's see.
I'm looking it up.
Yeah.
I was, yeah. Oh gosh, it's a quarter.
Around 13% of the total budget in recent years. And it looks like the historical highs toward the end of the Cold War, it was 30%.
So according to this federal outlay, according to chat, I said, the question? Here's how I phrased it. I phrased the question: what is the U.S. government's economic impact in 2025? The federal outlays roughly 23 to 24% of GDP in 2025, with revenues at 17, 18%. That means a net fiscal footprint is structurally large. So, I mean, it certainly matters. But you also would make the conservative argument of that is, if those are necessary and or in demand service products and services, if the government wasn't doing it, the private sector would step in and do it. Right. So I don't know. It's an interesting question.
Yeah. Cause that's just what, so the real question is, it's like, okay, well, if they did cut the budget, what would that really do to our economy?
Oh, it would be bad. See, that's the problem is we basically, especially because it's so nebulous, it's cognitive dissonance, right? So it's like, it's sort of like if you're really fat and pretend there's no GLP-1s, right? You can go on a diet now, and that's going to suck because no one likes to diet and exercise.
Or you're going to die.
Weird. Or you're going to go into the hospital and they're going to put you on a diet while you're lying flat with like a ventilator in because you already had a heart attack. And you're going to diet at some point. It's just whether or not it's forced upon you by the doctors or not. And most of us live in a cognitive dissonance world where we're just hoping that tomorrow is going to be the solution, where I get to not be fat, but somehow don't have to suffer dieting. Right. And yeah. I really think, I think that's where we are as a country, because when it comes down to it, most people are very for the government cutting things until it's their things.
Yes.
What about Social Security? Well, what about veterans benefits, which I think should be sacrosanct, but what about budgets for public schools? Well, I'm a teacher. I have to pay for my kids to have supplies out of my own pocket. What are you talking about? Like, people just don't. They don't, and of course, it also feels like, and I think this is very fair. Let's say you're the teacher. We'll say we're going to cut teacher stuff. Do you have any faith that enough other things are going to be cut to make a difference at a countrywide, at the federal level, that makes our country healthier and safer and more secure? Or does it just feel like it's just going to make it harder to do your job? You get less, and they're just going to spend that bullshit elsewhere. In which case, well, if you're going to spend it anywhere, then I want to get mine.
Honestly,
and I have zero confidence that psychology is going to change. How could it? It's game theory.
Honestly, I mean, it's back to the Doge thing that you were talking about. They already, and they continue to keep finding this fraud all over the place. Yet it seems like nothing ever gets cut and no one ever pays a price. I mean, there's a lot of fat that can be trimmed that won't affect actual, benefits that a lot of people get. It's I feel like that there's like this gray area where, because everyone is, always, talks about that the government spends too much, and if they cut, it's, that, we have to give up things like, Social Security or roads or whatever, without acknowledging the fact that there's so much waste that can be eliminated that would, alleviate the pain greatly without directly, really affecting the it would do is just force things to run more efficiently.
No, I do agree. So much though, but so much of the budget right now is just interest and mandatory entitlements, right? Medicare,
Yeah.
Medicaid, Social Security. Like that right there is like $4.5 trillion.
Yeah. So
I saw that like all if you take and then you add the military in. So if you just take entitlements, military, and interest, that's 85% of the budget, right? So then you turn around and go, I mean, you get rid of Department of Education, you get rid of Department of Health, you can get rid of you get rid of all the departments except for Department of War, and you're still spending more money than we took in.
Yeah, the interest is 15% of our whole budget. Defense is 15%, so it's basically died. And then health and Medicare is 28%. So
Yeah.
basically,
Social Security.
And Social Security is 22%, but argument is that we're paying into that. So
yeah, that's why I always get weird.
Right, but I'm just saying if you add all those up, so 15, 15, 22, and 28, what do we get to?
I don't know.
22 and 28 is 50 plus
that's 70-ish.
Yeah, we're at 80%, and it's military, interest, Social Security, Medicare, and I assume
and that's it.
Obamacare stuff. Yeah,
that's it.
Right, yeah. Which is, my point is there's no Somali daycares in there yet, right? And so it's just it's just a very frustrating situation. And the thing is, like, there really isn't. There's historical allegories, right? But there isn't modern capitalistic it's not like we can point to anything like the biggest economy in the world going default. I don't think, at least not in modern times. I mean, sure, Argentina has a default, or Chile or Zimbabwe, but that's not to crap on Argentina. You guys got great steak, but like it's just not the same thing, right? And it is weird, and maybe this is also something that is true. So here's the biggest argument against tariffs is if you structurally enforce tariffs enough such that it makes it not ideal to send your stuff to America, you're going to now have Europe and China and India, and they can create their own trading block, right? If they got self-sufficient without us, no longer are they as concerned about us, right? Whereas right now, there's a really famous, I don't say it's famous, but it's a common adage you'll hear, which is if the United States gets a cold, the rest of the world gets a flu. So right now, our economic prosperity is their economic prosperity. And while I do think we shouldn't get taken advantage of by other countries, and I do think targeted tariffs actually make sense in a lot of ways, depending upon the specific item we're talking about or trade part we're talking about. But in general, it's that whole keep your enemies closer thing. Like, we need them to be as reliant on us as possible, because that makes our prosperity their prosperity. Right? And that's an easier way to go along and get along, right? And I'm not saying we should go into debt for it. I'm not saying we should go fight endless wars other places for it. But I do think we don't want to encourage or antagonize the world such that they decide to find a different way than us, because with globalization, they can. It takes some time and some money and some pain, but they can.
Do you know China spends as much as we do now on their military?
No, that's bad news. Awesome. Okay.
Yeah, 200 and they basically have equaled what we're spending.
But they're able to massively upgrade their power grid, their electrical infrastructure, build these massive cities, just, the stuff that they're doing, it just seems to be like head and shoulders above what we do. And I honestly don't understand it enough that, how they're able to do that. But it just, it seems like that they are, kind of an economy that's growing while we're an economy that's struggling and shrinking.
Right. Well, and I mean, they are dictators, right? I mean, at the end of the day, they say build a dam. You just build the damn dam, right? You don't have all the regulations. They pollute more than every other. Well, I guess they and India are by far the two largest polluters in the world. I think it's China by
now. They don't give a shit about that.
Yeah, stuff. I mean, so there's a lot of unfair advantages there, right? And I think, looking at China, I think you can make, now they also have these ghost towns, and you definitely see massive misalignment of capital. So I don't think that a centralized planning government is the best way to do it academically. But it'd be really hard to argue right now that a government like that isn't better as far as getting said shit done, right? They get shit done. And what might be a really unpleasant truth is that the ideal of the Western sort of ideals, founded, based down into the Greek philosophers from those days to now, of democracy, of individualism, of freedom, of giving each man, sort of their own. There's a word I'm looking for that's Latin, but it's basically manifest destiny, right? The idea that you can be the command of your own ship, and by following those pursuits with a bunch of other people, create a community that flourishes. I think that's probably all morally true. I don't think anybody even doubts that. But it may not be, on a pragmatic level, the most effective way to run a really large country. And what scares me about that is I don't think I by no means want us to be a communist country. But it sort of feels like when we were kids, remember Rocky IV?
Yeah.
Remember Drago? Like it was Dolph Lundgren's character, and he's got like like, where's this the middle of the Cold War, right? I remember thinking, like, watching those previews, I was probably 7, 8 years old. And I mean, even though I knew it was a movie, like in my head, it was like, that's how the Russians do it, man. They use all those special robots and drugs and stuff. They just create super soldiers.
They just don't give a shit, whatever it takes to be the best.
Exactly. Versus the hard one, I'm going to punch sides of beef, Rocky, run up the stairs.
Yeah.
And I really think,
shit.
That's a little bit about how they're doing it, right? I think China's just doing whatever. There is no secondary priority. It's just whatever they want to do, to the point of DeFi. They don't give a shit about clean air. Just build a power plant.
Well, Jeff, make this your closing thoughts. We're at 11 o'clock. Sorry, I lost track of time.
Oh, well, that's all. I just think that, I think that we need to keep an eye on the horizon with China. I think we have to match them. But at the same time, I just think I think it's going to be very difficult to match China with the gridlock we have today and still respect the freedoms that we expect as Americans. I think it's just a much harder path.
That's valid. Taylor.
Well, I misspoke. I didn't realize we don't spend 300 billion on our military. We spend 1.4 trillion.
Yeah.
Okay, good. Good.
Yeah.
So
good. I was worried there for a minute.
Yeah, I know. It's like, oh, okay. I was looking at the wrong number there. I was like, how is China spending as much as we are? Yeah, that makes more sense. But I disagree with one thing. We spend too much on military.
Oh, I'm not saying we spend too much. I'm just saying I do want to have a strong military. But I think there could be a middle ground there, right?
I think, in my closing thoughts, I think it's not necessarily how much we spend on each of these things. I think it's how it's spent on each of those things. It's not the amount, it's how it's spent.
Yeah.
Because there is massive amounts of fraud, waste, and abuse in our government. And I think current events show that, and there's a fine line between, waste and abuse and actual fraud. because we're seeing it in Minnesota. We're seeing where, there's billions and billions and billions of dollars that were paid out for these daycares, and no children were being watched. And it was for a community that 80% of them are collecting welfare. They're collecting housing. So what job are they going to where they need daycare? So that in and of itself. And then now they're starting to find that the governor, the lieutenant governor, and the AG all knew about this and shut down programs that were supposed to oversee and prevent fraud. So that's the line between, basically where they're throwing money at something. I mean, Newsom in California, you got the high-speed rail between San Francisco and LA, billions of dollars into that, nowhere near being even usable for anything. They spent, billions on homelessness. Their homelessness problem is worse than it was when they started.
Mm-hmm.
We need to stop relying on government to fix everything. That's my closing thoughts. So, gentlemen, I appreciate it. I know you're busy. Need to get back to work and, dollar bill. So I appreciate you taking the time. And until next time, Veteran Crypto out.